When most people imagine entrepreneurship, they picture bold decisions, innovative ideas, and thrilling pitches to investors. They think of scaling fast, building teams, and changing the world. What they do not picture is the spreadsheet late at night, the unpaid invoice, or the creeping anxiety of not knowing where the money is going. But here is the truth: every real entrepreneur eventually learns cash is not just fuel for your business, it is oxygen. Without it, your business suffocates, no matter how great your product or how talented your team may be. If you do not master your finances, your business will master you. So today, we will break down exactly how to manage your cash without the headache. The first step is simple but often ignored. Separate your personal and business finances from day one. Too many new entrepreneurs use one account for everything. It seems convenient at first, but it becomes a mess over time. When you pay your phone bill, buy supplies, and take your spouse to dinner all from the same card, you make tax season a nightmare and accurate budgeting impossible. You need to open a dedicated business checking account and a business credit card, even if you are just a solo founder. Doing this immediately sets the foundation for clarity. It also helps you build business credit, track expenses correctly, and prepare for funding. Separation is the first rule of order in financial management, and without it, chaos is inevitable. The second key principle is mastering your cash flow, which is very different from profit. You can be profitable on paper and still run out of cash. That is because profit is theoretical. It lives in accounting reports. Cash flow is practical. It decides if you can pay rent next month. Always monitor the timing of your incoming and outgoing funds. For example, if you invoice a client and they pay in 45 days, but you have bills due in 30, you are in trouble. A cash flow forecast, even a simple one, will help you prevent these issues. It shows you how much money is coming in, how much is going out, and when those movements happen. A strong cash flow system does not just help you survive, it helps you plan, grow, and invest with confidence. Third, build a basic budget and actually use it. Entrepreneurs often hate budgeting because it feels like a cage. But a budget is not a restriction. It is guidance. It tells you what you can afford, what you should avoid, and where your focus should be. Start with categories like operations, marketing, payroll, software, and emergency funds. Track your real spending monthly and compare it to your budget. When things change, and they will, you can adjust. The goal is not perfection. It is awareness. A good budget gives you insight into your business's priorities and spending habits, and it forces you to think like a CEO, not just a creator. Every dollar has a job. Your budget decides that job before chaos does. The fourth rule of smart finance is this: pay yourself, but pay yourself right. Too many entrepreneurs either pay themselves too much too soon or too little for too long. The first drains the business, the second creates burnout. You need a balance. Ideally, start by setting a baseline owner's draw or salary that reflects your actual cost of living while leaving room for the business to breathe. Revisit this figure quarterly. As the business grows and stabilizes, adjust accordingly. But do not fall into the trap of treating your business like an ATM. Discipline now creates freedom later. Your future self will thank you for that delayed gratification and thoughtful structure. Now here is something every founder needs to hear. You cannot manage what you do not measure. This is where bookkeeping comes in. And no, you do not need to become an accountant. But you do need a consistent system. Whether you use software like QuickBooks, Xero, or a spreadsheet, your financial transactions should be recorded and categorized weekly. Not monthly. Not when you feel like it. Weekly. Bookkeeping is the backbone of all financial decisions. It tells you what you earned, what you spent, what you owe, and what you are owed. And when tax season arrives, your future self will be grateful you kept it organized. Poor bookkeeping leads to overpaying taxes, missing deductions, and failing audits. Good bookkeeping makes everything easier, from securing a loan to attracting investors. Let us pause here, because this is the moment when most entrepreneurs either lean in or tune out. Here is the hard truth. If managing your money feels like a headache, it is because you are trying to build a business without understanding the lifeblood that keeps it alive. You would never drive a car without checking the fuel, oil, or tires. So why run a business blind to your cash flow, debt, or expenses? Real freedom in business begins when you stop fearing the numbers and start using them as tools for strategy. That brings us to another powerful practice. Build a runway. A runway is how many months your business can survive if no new money comes in. It is your safety net. It is your buffer against market downturns, slow seasons, or client losses. Many financial experts recommend 3 to 6 months of expenses saved in your business emergency fund. That may sound intimidating, especially if you are early in your journey, but you build it $1 at a time. Automate a small transfer into this fund every week. Treat it like rent, non-negotiable. Over time, this runway will buy you something rare in entrepreneurship: peace of mind. When others are panicking, you will be planning. Next, be proactive with your tax strategy. Taxes are not just an end-of-year event. They should be a monthly consideration. Estimate your quarterly taxes and set that money aside in a separate savings account. Avoid the temptation to spend it. Consult a tax professional early, not just in April. A good accountant will help you structure your business correctly, track deductions, and plan for future liabilities. They will save you more than they cost. Tax mistakes are some of the most expensive mistakes an entrepreneur can make, but with a proper system in place, taxes become predictable, not painful. Let us also talk about debt, because not all debt is bad, but all debt should be intentional. Business credit cards, lines of credit, and small business loans can be powerful tools when used wisely. They can help you invest in growth, manage seasonality, or take advantage of bulk pricing. But uncontrolled debt can strangle your business. Know your interest rates. Know your terms. Have a plan for repayment before you borrow. And always ask, will this debt create revenue that justifies its cost? If not, wait. Discipline in borrowing is the difference between leverage and liability. Another essential element of finance is reinvestment. As your business begins to generate profit, resist the urge to spend it all. The best entrepreneurs reinvest strategically into marketing that works, team members who multiply results, or tools that create efficiency. Create a profit allocation plan that decides where each dollar of profit goes. Some to savings, some to growth, some to owner's pay, some to taxes. This gives you control. Without it, money disappears into distractions. Reinvestment is what turns small businesses into scalable machines. But it only works when guided by clear financial principles. You must also learn to analyze your financial reports, even if you are not a numbers person. Every month, review your income statement, balance sheet, and cash flow statement. Understand what each one tells you. The income statement shows how profitable you are. The balance sheet shows what you own and what you owe. The cash flow statement shows how money moves in and out. You do not need to be a financial wizard. You just need to ask the right questions. Where is money leaking? What expenses are growing? Which products bring the most revenue? These answers are in your reports, not your gut. Finally, embrace the mindset of financial leadership. This is about more than money. It is about responsibility. Your financial habits reflect your leadership style. When you handle cash with discipline, strategy, and foresight, your team, investors, and partners feel it. Financial leadership builds trust. It allows you to forecast, scale, and pivot. It prepares you for hard times and positions you to seize opportunities others miss. This is not about being perfect. It is about being intentional. To summarize, separate your finances, master cash flow, create and use a budget, pay yourself properly, keep clean books, build a runway, plan your taxes, negotiate terms, manage debt wisely, reinvest smartly, review your reports, and lead with clarity. Entrepreneurship is hard enough without financial confusion, but once you take control of your cash, everything else becomes easier. Your decisions are sharper, your plans are clearer, and your confidence grows because you know exactly where your business stands. If you want to dive deeper into building a recession-proof business with limited capital, watch the next video. It will show you how to do it step by step.